Welcome back to Explain the Charts, everyone. Today, August 3rd, 2025, we're taking an exhaustive look at ETHUSD, a market currently rife with fascinating contradictions and intense price movements. The live Ethereum price today stands at approximately $3,419.60, a slight premium over yesterday's daily close of $3,393.12. Setting the stage for our analysis. Recent news from Galaxy CEO predicts Ethereum could soar to $4,000 by year-end 2025, driven by supply constraints and surging institutional demand, while another analyst even posits a plausible $16,000 ETH as technicals and ETF demand align. However, in a stark contrast, Analysts reports that Ethereum whales are boosting their shorts to $77 million as price experienced a 5% fall, painting a complex picture for traders. CNBC highlights Ethereum's evolution from a scrappy experiment to Wall Street's digital backbone, powering stablecoins and major bank payment rails, underscoring its foundational importance. Despite concerns over high network fees, the burgeoning interest in decentralized finance and NFTs continues to exponentially increase demand for ETH and its ecosystem. This long-term optimistic outlook is further reinforced by a strong developer community and planned future upgrades aimed at improving scalability and reducing costs. Looking at the daily chart, spanning from March 2024 through today, we can observe the broad historical context of ETHUSD's price action. Notably, Ethereum reached highs close to $4,000 in late 2024 and early 2025, aligning with the bullish predictions made by some analysts. We also see significant periods of volatility and sharp corrections throughout this time frame, demonstrating the dynamic nature of this asset. Now, let's narrow in on a critical period of recent volatility on the daily chart, specifically from early April 2025, to understand the market's reactions. We witnessed a dramatic price depreciation in early April, with ETH plunging from around $1,800 to lows near $1,400 in just a few days, indicating intense selling pressure. This sharp downturn can be correlated with broader crypto market sell-offs, as indicated by news of Bitcoin dropping below $115,000 during this period. However, following this steep decline, Ethereum demonstrated remarkable resilience, staging a powerful recovery from the $1,400 support zone to rally back above $2,700 by mid-May 2025. The high volume accompanying both the strong downswings and subsequent recovery candles suggests significant institutional and retail participation during these moves. More recently, from its mid-July highs, the price has once again shown bearish pressure, with noticeable red candles leading into the current trading week. This recent price action, particularly the downward trend over the past few days, directly reflects the news of whales actively shorting ETH as the price falls. Shifting our focus to the shorter one-hour time frame, although this data precedes the very latest daily closes, it provides granular insight into market movements from mid-July. From July 13th to July 16th, we can clearly identify a strong upward trend, with price moving steadily from around $2,973 to break above $3,250. During this rally, successive green candles dominate, often accompanied by solid volume, suggesting sustained buying interest during this period. Key resistance levels within this range appeared around $3,050 and $3,150, both of which were successfully broken on the path upwards. Support established during pullbacks within this trend would likely be found at prior resistance levels, illustrating the classic flip in technical analysis. Now, zooming even further into the 15-minute chart, covering late July through the early hours of August 1st, we get a much finer view of very recent trading dynamics. Here, we can observe the immediate price action leading into the current daily downtrend, showing a consistent bearish sentiment within shorter timeframes. Price levels around $3,700 to $3,800 acted as a strong resistance zone during this period, with repeated attempts to break higher being met with selling pressure. Immediate support on this time frame emerged around the $3,650 to $3,700 area, where price found temporary bounces before continuing its descent. High transaction counts on some of these dropping candles indicate a swift increase in selling activity, coinciding with the whale shorting news. For short-term traders, recognizing these intraday support and resistance zones alongside volume spikes is crucial for pinpointing quick entry and exit points. The current microstructure on this chart suggests that any rallies are being met with selling, reinforcing the short-term bearish bias seen in the daily chart's most recent candles. To summarize our analysis for ETHUSD, both bullish and bearish arguments hold weight, making it a market demanding careful navigation. On the bullish side, the long-term outlook remains highly optimistic, bolstered by strong institutional interest, the potential for ETF approvals, and robust ecosystem growth. Predictions from experts ranging from $4,000 by year-end 2025 to a staggering $16,000 or even $26,000 to $35,000 long-term speak to Ethereum's fundamental strength and ongoing development. Ethereum's historical resilience, demonstrated by its strong bounces from major lows, further reinforces the long-term bullish narrative, particularly if broader crypto market conditions stabilize. However, short-term caution is warranted due to recent bearish price action on the daily chart, accentuated by whale shorting activity and a negative funding rate. This recent downside momentum suggests that current supply is outweighing demand, at least temporarily, putting pressure on immediate support levels. Key price levels to watch in the short term include the immediate support around $3,300 to $3,400. A break below this could see price test major support at $2,800 to $2,850. The critical long-term support zone lies around $2,400 to $2,500, a level that has historically provided strong bounces. A significant breach here would signal deeper concern. On the upside, immediate resistance is found around $3,500 to $3,600, followed by the formidable overhead resistance at the $3,800 to $4,000 psychological and historical high. For bullish reinforcement, look for ETH to reclaim and hold above $3,500 with increasing volume, signaling a potential reversal of the short-term downtrend. Further bullish confirmation would involve breaking past the $4,000 level convincingly, opening the door to those higher price targets. Conversely, if ETH fails to hold $3,300 to $3,400 and volume remains high on sell-offs, expect a retest of lower support levels, reinforcing a bearish short-term outlook. Traders should closely monitor on-chain metrics, funding rates, and news regarding Ethereum ETF developments, as these could provide significant catalysts. Always remember to implement robust risk management strategies, such as setting stop losses and diversifying your portfolio, regardless of your directional bias. Thank you for joining Explain the Charts for this in-depth analysis of ETHUSD. Stay tuned for more market insights.